Hey, everybody. Welcome back to another episode of Who Charted, the final episode of the year here for 2022. This is Dan Russo with Potomac Fund Management. With me, as always, is Drew Wells. The most exciting 6 minutes in markets. As you know, we're going to get into it right now. 6 charts, 6 minutes. You know the rules, Drew. Let's get after it.
All right, we've been hitting the international theme hot and heavy here lately, and this is another one to keep an eye on for sure if you have to remain invested in this space. I know a lot of you do, so we've been calling these themes out. Take a look at international momentum relative to domestic momentum here, punching above that long-term resistance level, above the 50-day moving average of the ratio there. Some nice price action out of what is arguably some relative capitulation there, certainly into November. Take a look at RSI down here at the bottom pane, getting overbought for the first time really since the early summertime here. So it's really interesting. We do a lot of work with this, certainly in our scans note that comes out every Monday. If you follow that, we've been calling these themes out as they take place. So it's not just international versus domestic at the large level. We're also seeing this more granularly at the factor level. It's definitely something to pay attention to if you have to be invested here.
All right, another topic that we've been hammering pretty extensively is commodities. First on the upside, and then as things were getting a little bit more selective, and now as things have become a little bit more dicey within the commodity landscape. Now, back in April, we started highlighting the fact that the easy trade in commodities was over. Just own a basket of commodities, right? And that being selective made more sense. That continues to be the case now. If you look at a broad-based index, such as what's in our Monday notes, the Bloomberg Commodity Index, you are going to see that index under pressure. Testing key support levels below key moving averages. However, under the surface of the commodity market, there's a bifurcation taking place. The metals, both precious and industrial, are taking out local peaks from the summer and are above key support levels. Agriculture, kind of meandering. Energy is breaking down. So if you look at the Bloomberg Commodity Index or any broad-based commodity index, the weakness is energy related. If you're more selective, there is opportunity.
All right, everybody's paying attention to the 200-day moving average in the S&P 500 for good reason. We didn't spend a whole lot of time above there, but take a look at 3,900 holding to the upside. We've been calling this level out in our notes for quite some time, so the S&P is kind of scrunched and trapped right there between declining 200-day moving average and that 3,900 level that has historically been a battleground for quite some time there. But take a look at some volatility metrics. We look at both a breadth metric and the VIX here at the bottom pane. Both of those have been declining. Typically the VIX has been moving back up into the 20s. What we don't want to see is that move back up into the 30s, that steady uptrend that we've certainly seen in the late summer or in early fall, concurrent with that volatility breadth metric. But right now they're still remaining relatively muted. I think if we get a break below 3,900, a rise in those metrics, the bias is probably with the bears. Obviously, another break above that 200-day moving average, that's biases with the bulls.
Scrunched is a CMT level 4 term, by the way. All right, let's talk about the 10-year Treasury note. Everybody's talking about bonds. Everybody's talking about the rally in treasuries and across the bond landscape since the October lows. Now, we've been highlighting 114 as near-term resistance for the 10-year Treasury note. So weekly chart, we're above the 10-week moving average, below the 40-week moving average. To me, now the real work begins. If the 10-year Treasury note is done going down, it probably needs some time in here to build a base. Bulls want to see pullbacks hold above the 10-week moving average. They want to see the yield break down below 3.2%. Until that happens, it's hard to make the case that the trend has changed, but we are on lookout. Next key level is the declining 40-week moving average and $118 price point for the 10-year note.
All right, semiconductors. This is one that equity bulls definitely want to keep an eye on. We want to see semiconductors leading. I think, going back to the chart of the S&P 500 that we showed earlier, if we do get a break above that 200-day moving average in the S&P, you definitely want to start to see semiconductors at least continue to outperform here. So Semi's trading above, the ETF rather, trading above 50-day moving average. It's rising above kind of a long-term battleground zone. Again, very similar to the S&P. Really gone nowhere for the past 6 weeks or so, but take a look at relative to the S&P 500 here. above long-term relative support right there, above a rising 50-day moving average ratio. Again, another relative battleground zone, but I think this is some confirmatory evidence and maybe some intermarket evidence, if you will. If the S&P continues to rise, break above the 200-day, you definitely want to see semis leading here, but definitely do not want to see the bulls don't want to see a breakdown in semis.
All right, and because this is the last show of the year, we're going to bring it home with a little something different. This is the Liv-ex Wine Index. As many of you know, people have been following me for a long time. I am a big fan of wine. And in a year where it's been hard to find uptrends in the equity markets and certainly in the fixed income markets, these charts jumped out at me. The Fine Wine Index is having a stellar year, actually a second year in a row of being higher. And what's interesting to me is that it's not the heavy hitters. It's not the Fine Wine 50 that's leading the charge. That's certainly up year to date, but only up about 2.8%. It's very similar to the equity market. It's as you move down cap. We've been talking a lot in the equity markets about how small caps have been outperforming the big generals. Check out the Liv-ex Fine Wine 1000, up 13.6% year to date, outperforming the Fine Wine 50 and outperforming the Fine Wine 100. So the good news is if you are a wine collector, this is a diversifying asset, at least this year. The bad news is if you're looking to do some holiday shopping for parties, in particular New Year, it looks to me like you're going to be paying up for a second year in a row. So that is the final chart that I have. Drew, take us home.
The man himself in his element. Thank you, everybody, to those of you who have supported us all year long. We certainly appreciate your viewership here, and thank you so much for a great year. Of course, smash that like button and subscribe, and have a great holiday. Don't party too hard, and we'll see you next year.
Thanks, everybody. We'll see you in 2023. Happy and healthy holidays to you all.